Guys, it's time to absolutely panic. The S&P 500 is down a whopping 1.96% last week. That has never happened. Actually, yes, of course it has. It happens all the time. Time to let go of your prayer beads and your pearls, and let's talk about this seriously and soberly. If I told you to look at this chart right here of the S&P 500 up 36% since October of 2023, would you say that it is overdue for a pullback? Forget everything that you think is going to happen. Would you say just based on this chart that it is due for a pullback? The answer is, of course, yes. As a matter of fact, the S&P 500 has experienced an average of 3 pullbacks of 5% or more every year since 1929. Now, for those of us that have been in the market for a long time, know that pullbacks are just a feature of the market and no reason to panic. For those people that think that the world is ending and have thought that the world was ending for the last 2 years and haven't bought a dime into the market, missing this entire rally, they think that this is the start of something worse. They think every single pullback is the start of a catastrophic event or the black swan that they never predict correctly. So if we take a look at the S&P 500 here, we've only had one 5% pullback, which was the first 2 weeks of April. That's it. Since then, the market has not pulled back by 5%, and it's almost the end of July as of the time of this recording. So like I said, the S&P 500 is down a little less than 2% last week. A 5% pullback, even a 10% pullback is something very normal. As a matter of fact, 10 of the last 20 years, the S&P 500 has had a correction of at least 10%. So in this video, let's talk about what has happened so far. What do I think will happen for the rest of the year? What stocks, options, and futures I'm looking at? And of course, as of the time of this recording, Joe Biden has just announced that he was stepping down. So what does a potential Trump presidency mean for the stock market, in my opinion, based on the data that we have? Let's get right into it. So like I said, the S&P 500 has only had one pullback this year of 5%, and that was the first 2 weeks of April. Since then, really, it has been a rocket ship, leaving all of the people that said, I will buy lower behind. Now, because I know how to read a chart and I look at data all the time, I don't panic when these things happen. As a matter of fact, I try to look for opportunities if they present themselves. We'll talk about some of the opportunities that I'm looking at later. But in my view, this is just a routine pullback. Like I said, the S&P 500 pulls back an average of 3 times a year, an average of 5%. We've only had that once this year so far. So looking at this chart, it looks literally like an elevator going to the moon. So yeah, I expect pullbacks to happen. Now, what I typically look at here is market structure, right? So if the S&P 500 on the weekly chart breaks the last higher low, then that is when I will likely start to have shifting opinions as to what is happening and look for more data to potentially get a new outlook on what might be going on. But in this case, we have this higher low here at around the 500 level, right? This was the last higher low on the weekly chart. So if the S&P 500 does something like this and closes below here, then I'll start to rethink things. Until then, to me, this is just a normal pullback. Now, as a matter of fact, if you bought every single pullback in the S&P 500's history, you would be a rich man or woman at this point. So even if you did nothing else but dollar cost average on pullbacks, you are doing yourself a service for your long-term portfolio, in my opinion. But let's dive a little bit deeper into what is going on now and why I'm not panicking and why I expect the market to run higher until the first rate cut. If we take a look at this chart, for instance, this red dotted line here is the first rate cut of that cycle. And if you look at the S&P 500, it is the blue line. The S&P 500 since the early 80s has always made a new high before the first rate cut, right? So you take a look at 1988, made a new high. Right then we had a rate cut. In that case, that was one of the few times that the S&P 500 actually rallied after the first rate cut. Remember, we were coming down from a 19.5% Fed funds rate. That was a very, very different time. But if you look at the modern times, post the Paul Volcker days, right, when the Fed funds rate has remained in that 6.5% or lower, you could see here that right before the 2000 crash, right, we hit the highest point right before the rate cut. If you look at the 2007 crash, we hit the highest point right before the rate cut. If you look at 2018, We hit the highest point right before the rate cut. And then obviously we had the pandemic. We hit the highest point in 2020 right before the rate cut. So in my opinion, if we are going to get a rate cut this year, and I think a Trump presidency increases the opportunity for a rate cut this year, we'll talk about that when I talk about the presidency. But in my opinion, if we get a rate cut in September or November or even December, I think we'll get at least one rate cut this year. Some are now estimating 2 to 3, but we'll get at least one rate cut this year. So until that happens, I continue to remain bullish on stocks. And unless the market structure is broken, then I'll just assume that the bullish trend is likely to continue. And I will then, at the signs of the first rate cut, make an assessment whether I want to offload some of my portfolio or not. I think there's a huge rotation into bonds as well, which I will talk about. Now, reason number 2 that I'm bullish is because if this bull market were to end now, this would be the shortest bull market in history. And the average bull market lasts 61 months. Right now, we are running on 21 months, which would match the bull market from the pandemic. Obviously, the pandemic being its own type of bull bear cycle, right? But right now, this would match the shortest bull market in history if this bull market were to end now. The average bull market lasts 61 months, and you would have to go back to 1966 to find a bull market that lasted in the 20s in terms of months. Now, as I said, Joe Biden just announced that he is dropping out, being replaced by the ever popular Kamala Harris, which means that probably Trump is going to win. And if we take a look at the stock market here, the stock market has really, this is a very important metric that I've actually never seen before. Shout out to Bloomberg Finance, a very small outfit by the name of Bloomberg. But basically, they compiled this data showing that there is negative correlation between Biden's reelection odds and the S&P 500, meaning that when Biden's reelection odds are increasing, that is negative to the S&P 500 and vice versa, as well as the positive correlation between Trump's odds and the stock market. So you can see here Trump's odds are in red. They've been steady throughout, and then they have increased. I think this was right around the time of that horrific debate where Biden's odds just dropped and Trump's odds skyrocketed. But you can see that the stock market has actually performed well when the odds of Biden being reelected have dropped and the odds of Trump being reelected, I guess, because he was president before, increasing. So what opportunities do I think are in the market? Well, if you guys have followed this channel, go back and watch. I was clowned for this take quite a while ago, back in November when I made videos on this, but I said that the Russell 2000, there's going to be an opportunity for the Russell 2000 to get back to all-time highs. And we hit a high last week of 226. All-time highs is 244. We are not that far off. There's quite a bit left from here from where we closed. There's about 12% left, but I think it's inevitable that the Russell 2000 gets back to all-time highs. And if there is an expectation, if the expectation is that Trump is going to hasten rate cuts, because remember how hard he was on Jerome Powell when he was president, and he got Jerome Powell to actually cut prematurely back in 2018, I think that he's going to pressure Jerome Powell to cut again if he's reelected and Jerome Powell hasn't cut yet. And what benefits from a rate cut? Well, the rotation trade definitely benefits from a rate cut. And I think that small caps will get back to all-time highs. I'm still in IWM, which is the ETF that tracks the Russell 2000. Those of you who follow me on that, good job. Those of you who clown me on that, well, whatever. I've talked about now being a good time to start positioning into bond ETFs. Again, I'm not a fan at this point of leveraged bond ETFs, but regular bond ETFs like TLT, I think it's good to start dollar cost averaging here. I actually think bonds can deliver double-digit returns come 2025 and 2026. I'm not going to throw most of my money in bonds. Everyone has a different risk tolerance, but you can, in my view, I will at least start rotating more and more into bonds if I decide to cut when the Fed institutes its first rate cut. So if the Fed starts cutting rates, then I'm going to take some of my long-term holdings. I'm not going to just convert that to cash, but I do think that there are potential double-digit returns in bonds as the rates continue to drop and bond prices continue to elevate, right? Not only are you locking in that interest if you're buying actual bonds, or that dividend if you're buying bond ETFs, but then the price of these things will rally as the bond yields decline when the Fed starts cutting rates. If rates continue to drop, that means the dollar is going to drop, which means I think that gold is on its way to make new all-time highs. It already did make all-time highs this month, and I think it will continue on that path as the Fed cuts. Now, if there's any sign that the Fed is not going to cut, right? So say that we get a CPI print that shows that inflation is roaring back, then yes, I think all this stuff, all of my analysis here has to change, at least in terms of timing. But if inflation is on the path that they're telling us it's on, where we have disinflation, the last CPI was the first CPI in I think 4 years that came in month over month negative, meaning disinflation. So if we are on that path, then everything I'm saying here, I think, will hold during the time with which I'm predicting it to happen. Now, in terms of individual stocks, I will probably make another video on this, but there are certain individual stocks I'm looking at right now. CrowdStrike tanked 11% the day that worldwide outage was reported. I didn't even know that many companies were actually using CrowdStrike. CrowdStrike is not even a $100 billion company at this point. And I did an analysis on it. I released it on X. By the way, follow me on X and on Instagram for daily free trading and finance content. I post a ton of analysis, reels on how to trade, etc., all for free. So make sure you follow me on those two platforms. But I said that, CrowdStrike is growing at an insane pace, which is why its stock price is trying to catch up to its momentum, right? So yes, if you look at CrowdStrike's PE ratio, it's astronomically expensive. If you look at its forward PE ratio, it's trading at the same level as all of the other cybersecurity stocks, whether you're talking about Palo Alto Networks or Datadog, etc. So I think that this drop, I really like when I spot these asymmetrical opportunities, especially if a stock drops on one-off news events that seem like an overreaction, right? So like when Google had dropped because its AI was woke, or when Target had dropped because of the whole, trans bathing suit controversy. Same thing happens here. When CrowdStrike drops 11%, I then become interested in it. So there might be an opportunity here in CrowdStrike as the price dropped from almost 400 down to the $300 range. I told you guys about Tesla, another stock that I was laughed at, even though from the last video that I made, it went from 170 to 270. So once again, thank you guys who laughed at that. Stay broke. But I think Tesla here is due for a correction. If I look on the weekly chart, I think that falling below its 2-year trend line, I think it can get down to this imbalance here before popping again. So I will likely not add any more Tesla until we get into that 220 range, and then I'll consider it again. And as I said before, I'm bullish on Bitcoin miners. Now, if you want to get all of my analysis up to date, up 51% on Bitcoin miners. Bought Tesla in the 150 range, obviously ran up to 270. Here's my alert on Google, March 7th, 2024. It was priced at 135. And here's my alert on IWM, the Russell 2000 from November 10th, 2023. I don't buy a lot of stocks, guys, but when I find these opportunities, then I strike when the iron's hot, when nobody is looking at these stocks, right? So whether it's Tesla, Google, IWM, Target, Ulta, these are all buys that we've had recently in the last few months. So, and then obviously I day trade every single day at market open, day trading futures, sometimes options. I swing trade options and then do long-term analysis on stocks. So if you want access to all of that in real time, it is a massive value for your money, in my opinion. Come join the community. Click the link in the description below. Let me know in the comment section what you think of the market. Do you think this is the start of the bear market? Do you think that a Trump presidency is good for stocks or bad for stocks? Do you think that Kamala is going to win? Let me know in the comment section below. Hit that thumbs up, subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.